Business on the programme now. Delano is here with us today. Going to start out with a look at the markets. How are investors reacting to that election in the UK then, Delano?
That's right, Stuart. Good morning. There's a lot riding on this election, and at the open here in Europe, we are seeing a positive start. The FTSE in London opening the trading day firmly in the green. Now, over in Asia, trading was very cautious this Thursday. The Nikkei in Japan closing Thursday session down 0.4%. The Hang Seng and the Shanghai Composite moved above the flat line in the past hour and are now trading in the green.
Now, there's one other big event that investors are going to be closely keeping their eye on, isn't there?
That's right, so that's a rate announcement from the European Central Bank. Policymakers are meeting in the Estonian capital, and while a rate cut isn't on the cards, the bank is expected to cut its inflation outlook through to 2019. The ECB has been under pressure by some members of the Eurozone to end its bond buying scheme, which they believe isn't justified without risk of deflation. For more on this story, we can bring in Naeem Aslam, Chief Market Analyst at ThinkMarkets. Good to have you with us on the program. Now, what does a lower inflation target from the ECB mean to you?
Thanks for having me. I think traders are reading too much into this headline because on the outset, it does look like that this is a very dovish message. And when we look at currency pairs such as euro dollar, we do see pressure building up. But the details are always, the devil is always in the detail, because you peel some of the layers and then you see if the ECB is really lowering its forecast, that's not really that much of a dovish message, because look at their forecast when it comes to the growth. They're still increasing that. And also, if we look at the four biggest economies of the Eurozone, their GDP have increased by 0.4% in the first quarter. So I don't really necessarily concur with this message that this is a dovish message for the market. Yes, today when he will release the statement, market will perceive that this is a dovish statement, and we may see some sort of a pressure building up on the euro. But again, make no mistake, I think ECB is still very much on the path towards its tapering process.
But we know that Mario Draghi's main objective has been to get inflation closer to the 2% mark. What should governments in the Eurozone be doing to help him achieve that?
I think fiscal reform is your answer towards that.
Well, Emmanuel Macron says he wants to do that, at least here in France. Now, as you were saying, growth in the Eurozone looks promising. But how much longer can the European Central Bank justify its bond buying program?
I think we have to look at the balance sheet. The European Central Bank's balance sheet far exceeds other major banks' balance sheet. Look at the Federal Reserve Bank. Look at Bank of Japan. The size of the sheer size of the European Central Bank balance sheet is way more larger than these banks. They cannot afford to keep these taps running. And because the patient isn't really in the hospital, we see that unemployment has improved. We see that the growth has improved. We see the productivity has improved. So there is there's no particular need when it comes to that kind of a quantitative easing. So we do expect them to start the tapering process towards the early start of next year.
Now, very briefly, elections in the UK are underway, as you just saw from our headlines. What outcome are you hedging your bets on? And will Theresa May have the firmer hand with Brexit negotiations she was hoping for?
I think it's anyone's guess to exactly say that, but because we don't know how reliable these polls are. But when
we got them so wrong for the Brexit vote?
Absolutely, but we do see enormous amount of hedges coming in the market.
Okay, Naeem Aslam, I'm going to have to leave it there. Thank you very much for joining us here on the program.
Finally, some crucial business news, something we can all get behind, bringing dogs to work.
It is very important if you're a dog person. I don't know if you are, Stuart. Now, tech companies in California are in fact encouraging employees to bring in their dogs. They say their presence boosts productivity, relieves stress, and in fact improves the work environment. Companies call it a win-win for employees and their employers. Take a listen.
Our employees love being able to bring their dogs to work, and it benefits our business. Our employees work longer hours because they've got their furry friends here, and Harvard Medical School has actually published a study that proves that dogs help to lower your blood pressure, reduce your heart rate every time you pet them. And in a startup environment where everyone's working hard and the work can be stressful, it's really nice to have the ability to go pet a dog when you take a break.
There you go. Bring your dogs to work day. You never know what we got under the desk, do you? There could be several under there. Thanks a lot, Delano.
They were so silent. Huh?
They're very quiet. Very quiet. They're keeping very calm.